Hi, I'm here at Future Proof Citywide in beautiful Miami Beach, Florida. I'm here with Garrett Schwartzberg from Nomura Capital Management. Thanks so much for joining me.
Thank you.
Obviously, private credit was one of the biggest themes of last year. So how can private credit work in a portfolio, and how can it complement traditional fixed income strategies?
Yeah, absolutely. So at Nomura, we find that three benefits of private credit are enhanced yields above the traditional markets, lower volatility to the public fixed income and equities, and lower correlation to the markets as well. So we use it as a true diversifier in your portfolio and a ballast there.
Absolutely. And what are some ways that investors can access fixed or private credit that they might not know about?
Yeah, as private credits continue to mature, the asset class is maturing. There's a plethora of different ways to access private credit. At Nomura, we manage an interval fund, which is a publicly traded 40 Acts registered investment vehicle where you could buy private credit through a ticker symbol solution. There's also BDCs, business development companies, fintech platforms. You could build your own customized sleeve of private credit. We find that interval funds have emerged as a great solution for wealth advisors to use as an access point to the private credit markets.
Yeah, absolutely. And why might borrowers turn to asset-based lending rather than going the traditional route?
Great question. So back in 2007, when we had the great financial crisis, banks started to lend less to the public markets and hold less at risk on their balance sheets. So they are still originating loans, but private credit lenders have stepped in as an alternative lending source to provide quicker capital to borrowers and be more flexible and customizable lenders to the lenders out there in the market.
Yeah, and obviously, AI is kind of changing the way that private markets operate. So how do you kind of see the landscape shifting because of that technology over the next 5 to 10 years?
Yeah, absolutely. I think the technology is really going to help within transparency. And one of the biggest issues in private credit today is the lack of transparency for the advisors and the end clients. And we believe that AI could help provide some more transparency and information of the funds underneath the hood to access the different managers, platforms, the solutions that are available in the market. We believe AI could be a great tool for advisors to fully immerse themselves in the private markets and learn more about the product set.
Perfect. Well, thanks so much for joining me. Hope you have a great rest of your conference, and go to the Daily Upside website for more conversations like this one.